It is the unofficial start of summer, and while you're probably thinking about the warmer weather and upcoming vacations, you should also be thinking about your money because a lot can happen over the next few months. So we begin tonight with the stock market. Dominic Chu takes a look at whether Wall Street will heat up along with the temperatures.
There have only been a handful of days so far this year where the S&P 500 has moved up or down by 1% or more. But that quiet move higher towards record levels isn't something that many traders expect to continue this summer.
I think we're going to have Washington continue to dictate our markets while participants stand on the sidelines and watch.
I think we're going to get out of this range that we've been in. We're going to go to the upside once the uncertainty is all behind us.
I'd like to be a lot more optimistic, but I'm a little concerned. I think when the president comes back into the country, we're going to go back into a bumpy politicizing again. So I'm going to lean to the sell in May and go away crowd.
Sell in May and go away is something many traders are thinking about this time around. The summertime has been a modestly weaker period for stocks. According to market analytics firm Kensho, over the last 20 years, the S&P has averaged a loss of 1.2% between May 31st and August 31st, and there are more possible catalysts for potential roller coaster moves ahead.
Our expectation for this summer would be more volatility for markets, and there are really several different reasons for that. Monetary policy normalization as well as geopolitical risk. We're likely to see more leaks coming out about what's happening with the investigation. We're likely to see a lot of events unfold outside the U.S., all of which can rock markets.
But there's a reason why stocks have largely shrugged off the political developments at home and abroad. Much of the corporate and economic data still looks relatively okay.
Fundamentally speaking, the economy still looks good, so we're still generally positive on equities. It's just that we need to get past this period of uncertainty before the markets can move forward.
It's still unclear what will eventually lead to that long-awaited pullback for stocks. But markets don't stay this calm for this long very often, which is why some investors are optimistic. Cautiously optimistic, that is. For Nightly Business Report, I'm Dominic Chu at the New York Stock Exchange.